Quite a buzz in Hong Kong,
Buzz, real buzz.
right? You've
Excellent.
been here. You come here a lot. This part of the
Many,
world.
many times.
Does it feel different?
Feels good.
Okay.
Feels good.
What's different, do you feel?
I think people sense that some of the U.S.-China tension has normalized a bit, and that the capital markets are receptive to new product. I mean, the reality is that the China progress through COVID and coming out of COVID has been spectacular across multiple industries. As you well know, you report on it every day. AI, robotics, EV, biotech, and now Hong Kong being the fulcrum to raise capital. Pretty exciting when the capital actually starts coming to market. So you had sort of the green shoots of the development onshore, but now you have the global capital markets being receptive.
You guys have probably the best position in terms of this resurgence in IPOs and equity capital markets raising here in the city. I had to look at the league tables. I won't disclose the actual number. You know the number. Help us understand what the competitive environment is like for deals, given that resurgence that we've seen in activity here, and what's the appetite from non-Asian-based investors to participate in all the fundraising that's taking place here in Hong Kong.
First of all, I love the setup to the question, so thank you so much.
Yeah, I didn't disclose the rank, though.
I really appreciate that. The team stability has been remarkable, beginning with Gokul Leroy and then the heads of banking, George Taylor, Shane Zhang, heads of equities, Ben Walker, head of fixed income, Nal Almeida, and then #1 research for a decade plus. You know, you've interviewed all the analysts.
Yeah.
Having stability matters out here.
Okay.
It matters. And when we think about the diversification of the Morgan Stanley businesses, Asia has always been a site of comparative strength, which means you need to come. You need to be here. When things are good, when things are less good. But the reality is China is the second most liquid market in the world, and asset managers are going to want exposure. So when times are a little tougher, maybe they'll be underweight and maybe it'll be beta, be more passively held. But when the animal spirits are kicking in and when there is clear advantage being struck by winning companies, they want alpha. When they want alpha, they want company-specific allocation. So that's when the new issue environment becomes so important. And we're having a great run thanks to that leadership, bringing companies to the public sphere.
Yeah.
And it's not just the progress in Hong Kong relative to Asia. It's that Hong Kong, as you know, is the most active IPO market in the world. Quite extraordinary.
Yeah.
And that's going to continue, and it's across industries. So if you are an investor and you're interested in one piece, robotics or AI or EV or maybe gold, metals, you have opportunity across sectors.
How do you look at it competitively now in terms of ECM business? Because it seems like the landscape has changed. I think 5 years ago when you asked us, could a Chinese bank be among those league tables? That probably answer was no. But now you're seeing them rack up more of these maybe smaller deals, but they are racking up in terms of volume of the number of listings that are happening. How do you view this sort of landscape now? And the changing dynamics?
I think that distinction is important relative to the past. You know, we had the SOE period. You go in, the global investment banks go in and try to do the privatization. Then we had the period of sort of the Alibaba, Tencent-led new wave. Then you had the competition of the local players, A-share listing. But as you well know, you now have contemporaneous AH listing.
Yes.
So you have to find ways to partner with the local incumbents such that the company feels comfortable that they're getting local advice, but they're also getting know-how on how to list globally. So that partnership, I think, is going to continue because the contemporaneous AH, the dual list, allows you to raise more capital across a broader investor base. So I think that norm is going to continue. I think with respect to the competitive environment, to be clear, it's as toughly fought as it ever has been. But these companies want to know what your EV and robotics expertise is within banking and research around the world. What are the developments that are going to make investors go overweight a particular robotics or biotech name that comes listed here relative to a weighting they have in Europe or the US? So the global perspective for asset managers and the ability to see that through the lens of the investment bankers effectively advising those companies is super important. The other piece is We have a very large equities business, prime brokerage, and cash business.
Yeah.
That's on the back of folks that want this exposure to the second most liquid market in the world.
Are you happy with your manpower complement? It seems like, do you have enough work? Do you have enough people? How does that dynamic work in your head in terms of
Oh boy, David,
where you need the resources?
that's such a great question, because I've watched you guys for many years with folks that are sort of post-cyclically jumping in, wanting to hire a lot of people, and then folks that are. We
Right.
tried to be pretty stable, 2,500 people in Hong Kong. That's been a stable number.
Okay.
Even with AI sort of invading the space and
Right.
creating efficiency and effectiveness, you need folks that are facing clients. Our high net worth group, as you know, led by Vincent Choi, folks that are 25, 30-year players that can access the global network, but also have folks that have domain, who are spending time in Seoul, spending time in Tokyo, spending time in Mumbai, and spending time in here, bringing a pan-Asia perspective. So there will be times when right now it feels bulled up in the investment banking space where we're maybe a little light, but then you lean on your global partners. What you want to avoid is feast or famine. Again, the clients see consistently whether you
Right.
have a lifer or someone that just came on 18 months ago.
Yeah. Is there definitely then no job cut discussions for 2026 then now, Ted?
Well, I think the reality with AI development is that you're constantly thinking about how there's greater efficiency, but then also effectiveness. So folks have to raise their game. There's going to be an ongoing sort of competitive threat, and that competitive threat is going to come from the highly digitized machine.
The robot.
The robot can do stuff, but in terms of overall staffing, I feel really good about what we have in Hong Kong. Really good.
Okay, you mentioned wealth. Let people hear from you. What's the wealth strategy for Morgan Stanley in Asia?
Well, I think the wealth strategy is to be well connected with our colleagues throughout Asia, but then to offer the clients sort of a global perspective. They are Asia-based, but they want to figure out how to allocate into the private assets class. They want to figure out how to have high risk adjusted returns in a sort of a weaker dollar regime. They want uncorrelated risk. So bringing the globe to our wealth management clients here, I think, is very important. But then also, how well connected are they into the banking and research ecosystem? They're highly sophisticated. What does Morgan Stanley bring across what we like to call, as David and Yvonne, the integrated firm that makes the Morgan Stanley kit a little different than the guy down the street?
Has it become more competitive now, you think, in the wealth business?
I think one of the things we learned, excellent question, Yvonne. I think one of the things we learned about the wealth management business is scale matters. We were under scale for a lot of years. Now that business in the U.S. is a $7 trillion business, but it's still only 10% of the total TAM available. I think here, too, we've looked to try to be a scale player, sticking to the high net worth segment, making sure that we're operating with a certain channel, but scale matters, and we'll continue to build accordingly.
And how does Hong Kong dovetail into your plans in terms of wealth in mainland China? Is Hong Kong still the jump-off point?
Yes.
As far as many of the solutions are concerned?
Yes. Hong Kong is existentially important. It's the port for capital flows. It always has been, right through 97, right through the periods that we've had ups and downs, and then through COVID. I think Hong Kong is going to continue to be a financial center for many, many years to come. So the beachhead here, 2,500 people we have in Hong Kong, absolutely critical. So for those of us that come 2, 3, 4 times a year, it's important that clients see that we are very much committed to Hong Kong as the unique center that it is.
We were just talking to David Solomon from Goldman saying he's heading to China. Do you have plans to head to the mainland, Ted?
Tomorrow, I'm on a different calendar. Tomorrow, I'm heading to Tokyo,
Okay.
where we spend a lot of time. Japan, very important to us.
Sure.
China, important too. India, important too. This is one of the things that's quite extraordinary. You have 3 very different narratives. That's even before you get outside of the big 3.
Right.
And we know them. Like, we could do 5, 10, 15 minutes on each one. But for us, Japan is very important. We have a 25% partner in Mitsubishi UFJ. They have held us since the financial crisis. We meet twice a year. We see each other quarterly. What's going on in Japan is truly extraordinary. And Japan's connectivity to the rest of Asia is important too.
In what sense? Well, what's changed for you in Japan?
Well, what's changed is,
apart from the interest rate that's there.
Well, okay, but that's critical here, because in a zero zombie type of economy, you have effectively yen and real estate and mattresses. Now they've been able to manufacture some inflation at a time when shareholders are now actively looking for governance. That changes the game a little bit. So now you have some real asset allocation. Importantly, given the demographics, you have, which is so much different than India, you have savings to investment over the decades to come. Who can bring the combination of investment banking, trading, and wealth management capability to Japan? That kind of setup. Well, in some respects, rule of law, that feels like the United States. And in Japan, much like Hong Kong, you can't tourist bank. You have to go 3-4 times a year, 5, 10, 15 years running, 20 years running. And we have a fantastic partner in Mitsubishi. So the key piece of this is interest rates are part of it. Shareholder activism is part of it. Deregulation is part of it. And then the demography of folks living longer, they need to be able to generate a return to be able to live off their savings.
Are you happy with the partnership?
Love it. It's
nothing changes.
Nothing changes. Continuity is so important. But we have done 2.0 where we trade a bunch of we call it Alliance 2.0 where we trade a bunch of the FX. We've combined the research and now we're starting to think about what 3.0 could look like. Yeah, very exciting. But again, one of the great things about Japan, and much like here in Hong Kong and in India, there's no rush. 5, 10, 20, 30 years, but you need to have an installed base and you need to make the visits.
There's so many regulators from China here. I'm just wondering, what are you looking for in terms of China and what could entice foreign banks like yourself to really ramp up investment in the mainland now?
Well, I think there has to be some element of de-escalation at the policy level, and I think we're starting to see that. I think that's important. I think for most of the traditional Western firms, Hong Kong will be the natural gateway. There's no reason to change that. Getting back to your earlier excellent question with respect to underwriting, to the extent you can actually be a leader in accessing global capital by having contemporaneous A and H, okay, then you need to be able to bank the companies locally to make sure that there's the right kind of transparency. But then you can also try to find global investors to come in there too. So onshore, offshore, hybrid, I think very important for the asset management business, for the banking.
You mentioned about India, which as you say is a long-term game. I'm just wondering in terms of what you see for that market, could it actually overtake China when it comes to the fees pool? Do you see that ever happening?
Well, ever is a really long. I mean, ever. I mean, we're just
we eat our
doing
vegetables, so we're hopefully going to live a long time. But
oh yeah. Well, what does that make me? Like part of the plant here.
That's
you guys look a lot better than I do. I like India, but I like China. You don't have to make the choice. You have $1.5 billion and $1.4 billion on 8. I think that's the math, right? So that's a pretty big, percentage of the global population denominator. They can both win. India can learn something from China, though, in terms of how to think about industry winners. This is the big change here now onshore. You're seeing real global winners in biotech, for example, and I think India is watching that, figuring out how they can not just be the 1+, but they can start having category killers that don't just serve in domestic demand, because at some point they'll have a demographic challenge, right? It's just the nature of human history, but then how to be global competitors. These markets, it's an excellent point that you make with the comparison. These markets can learn from each other.
Ted, we got to leave it there, but thank you. Ted,
you guys are very good to see me.
Chairman and
thank
CEO
you.
at Morgan
Thank you,
Stanley.
David.
Thanks, Yvonne. Back to you.
Thanks very much.
Thank you. Have a good day.